welcome into another live stream here. Hope you guys are having a good morning or evening. The range continues here. The keyword for this week is range. We continue to bounce around like the ping pong between 35.70 on SPX and 37.61 or 37.60 to be easier. And this range continues in the market as we continue to find a local high or a local low. Yesterday was littered with another bout of shorts covering and also a little bit of a squeeze intraday. So we're definitely interested to see how today goes, because a break below 36.85 or so is going to send us back into 35.70-ish. Back again for another raise. Of course, we have another test down here at 36.15 that we have to be aware about. And that's kind of what we're looking at in terms of the order flow and the volume for today. Volume has been suspiciously low in the past two trading sessions, and as I have already warned you guys on Monday, this is not the week to take on additional risk for unnecessary reasons. This is a week where you go very light in risk, and you try to pretty much stay out of the harm's way. Because of the options expiry and the way that things are going to go, especially since today we'll have VIX options that are going to expire, and then also towards the end of this week we'll have pretty much the nominal options that will expire as well, to the tune of about $2 trillion. So that's quite normal. So as you know, majority of market dealers are going to continue to roll out their positions and also cover positions and take new exposure. So a lot of the flow is going to be very misleading this week. Not to mention that we'll continue to see price action move whipsaw back and forth a lot, which has been the case since Monday. So heading into Wednesday here, I don't really intend to see much of anything else. If anything, we'll get downside pressure. But this series of wick candles here have been quite interesting at around the 3,700 mark. So pretty much if we are to be non-biased, then below 36.85 gives us the short trade down back into 36.15. But if we hold this level today, then we are likely to go up and retest 37.60, and then after that 3800, which is the local high from October, like early October. So that's where we are in terms of the technicals. In terms of the macro front, nothing has changed. Financial conditions are still tightened. Also, we had hedge funds increase their short exposure the past 2 days. Investors remain heavily bearish, which kind of still, tells me that, the pain trade is still going to be to the upside. Especially if shorts keep covering, it's going to squeeze the market to the upside. And once that squeeze actually does happen, then I think that gives the all clearance to the downside, which is still where my bias is at. I know it's not good to have such a strong bias, but unless we break above 3,800, I'm going to remain biased to the downside, since we are in a bear market. That's just the way that I'm going to be viewing things. Of course, feel free to have your own personal views, and I love encouraging new personal views. What do you think is going to happen? What do you think this market's going to do in the next couple of weeks? Give me your comments down in the chat, in the comment section. Let me know what you think. I would really like to hear from you guys, especially during these times when the market's just chopping around. Really not really giving us much of a range. The case on NASDAQ is a little more of an interesting one. In this downward channel, with one false breakout since that time in August, we've been seeing a very, very strong downtrend. Every single pop has been sold, and we have been hitting down further and further and further. Even yesterday's rally got faded away on the NASDAQ, which is, I think, quite interesting. Not to mention, of course, we have earnings coming up this, next 1-2 weeks, this week and next week. Today, Tesla's going to report earnings. Netflix reported stellar earnings. I bought a strangle on this position. Hopefully it's gonna open up in a way that it won't get squeezed. So let's see what happens. But yeah, NASDAQ is still looking very, very bearish here in terms of just price action. But volume has been very low, very, very low volume in trading. So it definitely gives me a little bit of jitters, because when I don't see volume being put into the market, that just means that moves are not going to last very long. They're not going to be strong trending moves. And so that's the reason why there's a lot of back and forth, up and down, up and down. Some developments this morning. The VIX bounced perfectly, as I was mentioning from Monday's stream. Or rather, is trying to bounce. Sorry, I take that back. Because we don't know if it's actually going to clear $32 here, or 32 on the VIX before we start heading to the upside again. But clearing above 32 will be a good sign that the VIX is going to continue higher here, and that will be more pain for the S&P 500 in today's session. So we'll see where the VIX lands up this AM intraday. On top of that, what's giving pressure to this downside here is two things. First of all, the bond market still continues to sell off here amidst even the fact that the Fed is going to pause QT this month, with the TLH selling off very aggressively this morning. You can see a huge gap down from 106 yesterday, and today pretty much, putting the credit market in a very awkward state. And then look at the 10-year yield, broken above 4. It was almost at 4.1 earlier. Now it's pulled back to 4.98. So 10-year yield back again. Remember what I keep telling you guys about 10-year yield. Keep watching the bond market. It'll give you clues on where equity pricing is going to go. Remember that the bond market is a good precursor on how the valuation of equities will go. So breaking out of this huge downtrend on the monthly and still climbing here, the next stop from here is going to be around 4.4, and then after that it's going to be 5.2 or 5.3, up into this upper range here. And it only seems like we are getting started with the parabola here, with this parabolic move. So we'll see if we can actually get a pullback. I think the pullback will come at some point in time. It's just a matter of when. As long as financial conditions can kind of loosen here, I think the bond market will reward equities with a relief a little bit. Gold, the trade that I wanted to take short, and I've been talking about it for the past couple of sessions, didn't come up to my entry. 157 is what I was looking for, and it continues to run away from me, but that's okay. I don't want to enter this trade until I get it at the price that I want. If it doesn't come back, that's fine. I'll wait for it to come back and retest these levels here. I do feel like it will at some point, so I'm going to give this a little more time. Apart from that, let me go through the usual suspects. Tesla with the continued range. On the 15-minute, this is a 15-minute chart. If I go into the 4-hour here, you can see that we got down nicely into the 208, which is what I was calling for a while. And it does definitely seem like we want to find some kind of a range over here, maybe even a kind of a bear flag to move to the upside, kind of like this. Of course, I'm just being overly dramatic to say, that we could continue to go like this, but in reality, if we truly do range here on Tesla for a little while, then this is what it's going to kind of look like. And if we continue to chop around, then we need to break strongly below this level at around $206 for us to see some downside. And semiconductors as well, a lot of chop, just sideways moving, but still in the bearish trend. This is what has mainly been giving NASDAQ the fuel for the downside. So yeah, those are the main suspects that I'm looking at in terms of volatility trades. Apple, still very, it was interesting to me like on Monday, but today it's not looking that great anymore. We were almost breaking out of a downtrend, and we were trying to bounce higher here on Apple, but then it kind of failed. So I didn't take any long trades on this. I was hoping for a 148 retest, which is the dual zone prior, but we didn't actually get it. So we're going to have to revise Apple trade again. We kind of got rejected at around 147 roughly. It looks like we're going to continue to squeeze sideways here on Apple, or even if we can get it low below 138, then that's going to be a short trade. And Meta is one of the trades that I actually do like. This one's interesting. Look at this daily chart, and also the 4-hourly. Let's hope that TradingView will, not lag and actually show me the chart. Come on. Okay, so here, look at this chart on Meta. Pretty nice. Downward trend and very strong bounce here. Now, the interesting thing about Meta is it has a huge range to cover on the upside for a upward trend line touch before another huge downside. But obviously, you can't take that trade until you get the clear break above 143. Above 143 is then when I would be comfortable taking this bullish trade here. And that gives me a decent risk to reward ratio to the upside up into, let's say, 153 for a $10 upside. And you can keep your $5 stop loss below it at about 138, which is where it's currently trading. Sorry, not where it's currently trading, but around here, which would negate the uptrend basically, right? So if it does break above 142, 143, that would set this up for a nice RR trade to the upside. 1:2 risk reward ratio. I'll be looking for that setup, and I have an alert set already on this for us to possibly play this. So that's just the opportunity that I want to put out there. Apart from that, I have nothing else. You guys have any questions, comments, concerns, put them in the chat right now. I'll give you guys a minute or two. If you have any tickers you want me to break down, go ahead, put it in the comments right now so I can do it. I'll give you guys 1 or 2 minutes, and then I'm going to end the stream if no one requires any help here. Once again, thank you guys for showing up consistently. Appreciate it. Taking the time out to be here. Make sure you hit that subscribe if this is your first time here, and also leave a like behind. Truly appreciate it. So, yeah. By the way, still have not taken the trade on XLE. As I was mentioning, above 85 is where I would really take it. But right now it's shopping sideways, and I don't want to be a part of that. Thanks for sharing. No problem, man. Absolutely. No worries. Thoughts on Piton? Let's see. Oh, that stock's like in the gutter, right? Yeah. Oh my goodness, this thing is nuts. Ah, man. This just looks terrible right now. I mean, at this point, it's pretty much like I personally wouldn't trade it. Looks like a pancake flattened this thing. Seems to be trying to reverse out, but very, very unlikely. So I mean, it does look like it's independent. It's independent right now, obviously. So you have this here, and you also have this here. It's squeezing into a pennant right now. This is kind of what I'm looking at. You want to see a break on either side of this, obviously. So break up, retest, that gives you the upside. Break down, retest, that gives you the downside. If you want to know where your targets are going to be, use the fib range, and that'll give you your targets. So I would do something like this wave to this wave for the downside, and the reverse will be for the upside. So downside targets will be here. Upside targets will be that side if you reverse the fib to the other way. All right. Well, I hope that's helpful. We'll continue to cover markets. I'm gonna suspect that this week is gonna be a very slow week. I haven't really taken much trades, to be honest, except for one trade that I took yesterday, which was a very risky trade on SPX. Apart from that, you know, I'm not intending to trade a whole lot. I'll take the opportunities where I get them, but apart from that, you know, I'm gonna be risk off this week. So I'll catch you guys back on Friday's stream. Once again, appreciate you guys taking the time out to be here, and I'll see y'all back again on Friday, guys. Take care and peace out. Bye-bye.